Good evening, everybody. I know we're coming in right in the middle of a Trump speech, but I'm sure they will play it over and over many times tonight. Well, that's a fine howdy-do. Okay. We're having me on tonight. A couple reasons. The main reason is we get a lot of requests, or a lot of people saying we still like to hear what you have, meaning me, have to say, versus seeing what somebody else's programs are. So I guess we've seen enough of their programs. So now we need to show how to incorporate that with getting back to the basics of candlesticks. So they will. What we're going to kind of do tonight is kind of point out some of the obvious things that you learn or you kind of look for once you know what the signals and patterns are really telling you. So, and the reason we're doing this is we're kind of going back to the basics a little bit so that you get more of an in-depth insight as to why the signals work so well. And this all came back to one of the very initial statements or observations that I had when I first started doing candlesticks way back in, I can't remember, the late 80s or early 90s. I think it was the late 80s. But just as the internet was starting to have chat rooms, different chat rooms, and I think Yahoo had a financial chat room, I'd go in there and ask people, after I started learning candlesticks, the rhetorical question, why isn't everybody using candlesticks? Because they make so much sense. And it made so much sense to me, mainly due to the fact that I always wanted to learn how to invest successfully. I was a stockbroker for 8 years and didn't learn a darn thing through all the trainings. I kept looking for that broker's broker that knew what made prices go up or down, and there wasn't anybody out there. I finally got out of the business because I realized the firms had no more idea about what made prices go up or down than anybody else. But when candlesticks came along, it just made so much sense to me. So the reason it made sense to me is I would do my own back testing. I would look at charts and say, all right, what was happening at the peaks and the valleys? And I would say 90% of the time there was some sort of identifiable signal. Now, I didn't know all the signals at that time, so if I saw something like this, I'd go back to my, which back then was kind of very archaic charts or books on the signals and patterns, and say, all right, that's a signal, and I'd do that for the tops and bottoms. And so in trying to learn all 50 or 60 signals and patterns, or signals anyways, I discovered as I kept going through more and more charts that there was only 12 to learn. So, but with that, I created my own visual investment foundation to tell myself, or at least imply to myself, that if I didn't know why a price was moving or what the rhetoric was out there in the markets at any given time, what made a price reverse? I knew prior to candlesticks, I knew what made a price reverse. If I sold down here, I knew very soon the reversal would occur. And if I bought up here, I knew very soon the reversal would occur. So what we're going to kind of try to do tonight is not only demonstrate what signals are the most powerful, but the implications that they create, or the assumptions they create. Now, as we go back and look at the Dow, obvious as the Election got very close. There was lots of investor sentiment being committed one way or the other. After the election, you see what's happened. So before the election, the rhetoric was if Donald Trump got elected, this market was going to crash. But as you can see, you don't have to listen to what anybody projects. You can see what type of chart patterns are created, especially with the graphics of candlesticks. So with that, once we know what a trend is doing, and we can recognize what a trend is doing, we know a trend doesn't go straight up. You can see what happened in the Dow a while back. We had a wave 1, wave 2. Now we're in wave 3. At the same time, you would think that everything was going great guns, except look what's happening in the NASDAQ. And was there anything that would indicate that the NASDAQ was kind of getting soft? Well, look at our left-right combo. Left-right combo is very simple. A doji in the overbought area, followed by a bearish engulfing signal. So these are the type of things that give us an indication of what's going on. Now, obviously, we'd assume that if the Dow was acting strong, the NASDAQ would be acting strong. However, that assumption disappears when you can see what's actually happening based upon the candlestick reversal signals in any one index. So what's that basically telling us? When the Dow's still going up and the NASDAQ's going down, pretty much tells us there's a lot of divergence in the different sectors out there. We can see that the big tech stocks are getting beat up pretty bad. Obviously heavier in the NASDAQ than the Dow. So with that, we can analyze which sectors are acting well or not acting well. For example, we can see what gold is doing. Gold is still in a downtrend. That means you probably don't want to be too aggressive going into long gold stocks. Now, that doesn't mean there isn't any investment opportunities. Things like Dust, which is the short fund for the bear fund, you can see how that's setting up as a wedge, looking for a breakout to the upside. On the other hand, Nugget, the bullish side, still staying below the T-line. But overall, there's really no action there. Now, with the change of investor sentiment in crude oil, as we can see in the January contract, big, huge move over the last couple of days, from 45 bucks up $6, up about 13% in this this rally, or even greater than that. So that tells us, yeah, we want to start looking, or we should be. We've gotten a lot of strong signals in the oil area. We can analyze outside influences very easily. The dollar's had a nice J-hook pattern. And so if we know our simple realities of patterns, there's a J-hook pattern. Wave 1, what do we know about wave 3? It's going to be approximately the same magnitude as wave 1. Well, if you look at this, that looks like about what's happened. So when we get up in this area, and we're in the overbought area, and we can measure this wave and this wave are about the same, that gives us more inclination to start looking to take profits that they might pull back. What could they do on the pullback? They could possibly be doing a J-hook pattern you can get back in. Michael, hold on to your individual stock requests. We're going to go through all of them. I have a bunch, which probably some of them will be addressed before we get to, but when we get done, all the questions are answered. I'll tell Jim to do the double line, and then you can put in your stock request. You can use whatever you want to. I don't use the cloud, because I don't find enough correlation. I should backtrack here a little bit. If you're looking at my charts, for those that are fairly new in here, you can see that it's not very complicated. We got the 200 simple moving average, the 50 simple moving average, and the 20 simple moving average. Those are all moving averages that every money manager uses on their charts. Everybody in the world usually has those on their charts, so everybody's waiting to see what they do with those moving averages. Here's the one that will probably outdo all the other indicators, whether it's the Bollinger Bands, anything else that you're using. This is the 8 exponential moving average. This is called the T-line or the trigger line, which we very simply use as if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a sell signal and a close back below the T-line. So as we go through this, you're going to find out that the T-line is probably the most relevant and trying to think of another word other than relevant. The most consistent for producing profitable trend analysis. I had something else important to say. I can't remember what it was. That's just great. As you can see, right now, after hours, the dollar's trading off a little bit. It's now the Trump line. There you go. All right. So anyways, very relevant in the sense it's probably more relevant or more useful than all other indicators. So I tell people that that's the black line is the T line. It's the 8 exponential moving average. The nice thing about candlestick charts is the one basic element that we know about the candlestick signals is that they work. Otherwise, they wouldn't be around for 400 years. The fact that they've been around 400 years and a lot of people are learning them isn't any function of the charts themselves or the method itself. It's just that nobody ever paid attention to it until about 30, 40 years ago. I can't imagine I've been investing with candlesticks that long. Geesh. But if you take everything else off the chart, the candlestick signals still work very effectively, telling you where you are in a trend and where a reversal is happening. With new modern techniques, we can see where our stochastics are. We're looking for the very basic definition of a buy signal. Japanese rice traders say if you see a candlestick buy signal in the oversold area, the probabilities are pretty strong that you're going to be in an uptrend. Glenn, there's different places to get into a J-hook. If we can identify that this is a J-hook pattern setting up, if we move this right to about there, and we saw a reversal signal in the oversold area, we saw a strong price move, what can we assume? That if this starts trading positive, we've got the potential of a J-hook pattern, which tells us we can either be buying right here if we're relatively aggressive, and you can see what happened the next day. I don't know if that's a true. That was probably that was election day where they really slammed everything and brought them back up. Well, you could either be buying right here because of the positive confirmation above the T line, or you could be buying right here, breaking out through the top of the J hook. So this is a little bit more aggressive. This is a little bit more less profitable, but the probabilities are much greater. So there's different elements of depending on each person's risk-reward factor of when you get into a trade. So when you can see things setting up, for example, today we've been long lean hogs, but today notice what happened. We had that bearish left-right combo, which is a very strong sell signal. So we closed out the trade. Now we know what our entry strategy is. If it comes down through the T-line tomorrow, we're shorting because what do we expect with the stochastics in the overbought area? Starting to see a bearish engulfing signal, a bearish left-right combo, and now trading, confirming the left-right combo and trading below the T-line. The probabilities are pretty strong. They're pulling it back to somewhere here or here. So we just know that we're in the right place at the right time. So we can analyze whatever you're trading. Now I'm happening to be going through uh, the futures right now, but you can analyze based upon candlestick signals and what everybody else is watching. So notice you had a downtrending channel or resistance level here in wheat. It started trading off, and just look at the simple analysis of what happens. Got up here right to the 50, hit a resistance level, opened lower the next day after a spinning top doji type day, closed down here the next day, they took it up. We've got very simple entry. If we were going short, we just put a sell stop right here, because if they took it up and failed to keep it up and came back down through, confirming this signal, that tells us we're in a downtrend. Yeah, CQG charts are very expensive. I pay $1,100 a month. You can get just as good charts on Metastock, on many other charting services. As a matter of fact, a lot of other charting services use CQG as their feed. Can you tell us what an appropriate stop loss would be for a typical entry point on a J-hook? Yes. But that's usually a case of each individual chart. What did we just look at? I can't even remember what we were just looking at, the head of the J-hook pattern. Was lean hogs? Okay. No, what was it? We just looked at the TEDA. That's just great. I can't even remember that far back. Was it the dollar? Oh, the J-hook pattern. Yeah, so remember, there's very simple rules that if this is the signal that told us the bulls were in control and it opened positive the next day, confirming the signal, and we were buying, the Japanese rice traders have a very simple rule. If this was the candle that told us the bulls were in control, where should it not close? It shouldn't close more than halfway down this candle, because if the sellers are able to close it more than halfway down the candle that told us the bulls were in control, the bears are still in control. You close out the position. So this is not difficult stuff. This is just common sense stuff put into graphics. And if you just learn the simple rules of candlesticks, you're going to put yourself into situations where the probabilities are greatly in your favor. It will take care of that old saying that you hear from most money managers that tell you, cut your losses short and let your profits run. But the problem with that is they never tell you how to cut your losses short and let your profits run. Candlesticks have very simple rules of where you set your stops, whether you're just starting a trade or whether you're looking to take profits. Okay, so we were looking at things like the wheat. But if we shorted here, what was our first target to see what would happen at the resistance level? The fact that we could see a candle that went right through the resistance level told us we were in a downtrend. Tomorrow, soybeans. After pulling back today, right smack dab, well, right now they just opened up after hours. But notice what they did. They did a doji right smack dab on the T-line. And there's a simple rule to doji. It's going to move in the direction of how they open after a doji. So it looks like if they're selling it off, now we have a bearish doji sandwich closing below the T-line. We're heading back down. This gray line is the 20. This line up here is what we call the 3T line. That's a 3 exponential moving average. And that works effectively by saying the further you wait, our T-line works. If you see a buy signal and a close above the T-line, you stay long until you see a sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back down and test it. So if you see a sell signal moving away from the T-line, you get ready to take profits. These are just indicators that give you much faster entry and exit strategy to take advantage of taking profits earlier. Fran, I usually wait to see, I wait a few minutes, and that's part of the entry strategy. There's 4 quadrants that we work with on the entries. There's going to be the market opening positive and your stock opening positive. Market opening positive and your stock opening lower. Market opening lower and your stock opening positive, or the market opening lower and your stock opening lower. They all have different, very simple elements of what to do after it starts. So how do you use the 3T? The 3T is just a factor that tells us the further away we move from the T line, the more relevant the 3T becomes for taking profits. No, crossing the stochastics mean nothing. We're not trading stochastics. We're trading the signals. The number one priority of any trading is the signal itself. Everything else is just a confirming indicator. And so obviously, seeing a candlestick buy signal in the overbought condition doesn't mean very much. Seeing a candlestick sell signal in the oversold condition doesn't mean very much. We're looking for the buy signal in the oversold, and we're looking for the sell signal in the overbought. We're not trading the stochastics. We're trading we're identifying where our signals are occurring. Okay. Oh, so in our options and futures room, we know, I do this already, we know that if we have sell signals, we get ready for a sell, but if it starts trading down here, we put out a recommendation that you might want to put a sell stop at 49,950, just below this level. If it comes in this direction, you start going short. Don, it all depends on how far away you are from the T line. And it's more of a visual element or analysis. If you can see that it's been trading relatively close to the T line, and then all of a sudden it moves way up here away from the T line, that tells you the exact thing that most investors do backwards, which was me. I was always panic selling at the bottom and always buying exuberantly at the top. Is this stock a buy or sell? JD asked that after I tell Jim to do the double line. We'll get to all of them. With the fact that the last candle closes below the 3T line, the sell signal here, it kind of confirms, yes, that you've had a left-right combo. The number one criteria is the signal itself. In this case, we're not that far away from the T line, but we are in the overbought area, closing back below the 3T. In this case, the 3T is not all that relevant. Now, had this been trading 2 days where it came up here and the T line was down here and the 3T line was up here someplace, yeah, now the 3T line becomes that much more relevant. All right, so because we know what direction the market was going, we know what our patterns are telling us. Look at AK Steel. We had that slow curve. This is my most profitable trade setup. Seeing a slow curve, which is a derivative of the fry pan bottom. It's also kind of the cup and handle. But the slow curve, we can identify where the buying's coming in, and we know exactly where our entry points are for big moves to the upside. Jamie, retype it. By the time I go up there and try to find it, retype your question. These slow curve breakouts usually produce big moves. So we've been recommending AK Steel for a while, and at this point, a lot of people say, well, man, we got big profits. Should we take our profits? And that's what usually happens to most investors. They got a profit and they're worried about losing some of their profits. They close out the position well too early. There's one very simple rule. If you're buying based upon a candlestick buy signal, you can stay long until you see a sell signal and a close back below the T line. So once the price action is above the T line, stay in the stock until it closes one halfway down the candle that is below the T line. No. Once you're above the T line, you stay long until you see a sell signal. Sell signal up here may be a bearish engulfing signal or shooting star. So again, there's six buy signals and 6 sell signals. They're not difficult to learn. As a matter of fact, I don't want to turn this into any promo, but this weekend we are doing a 2-day training session for what we call our bread and butter training. We start at 9:30 on Saturday morning. We start with all the candlestick signals, where they work effectively, why they work effectively, and the main element that the candlestick rice traders have provided for us is not only do they show us how to identify the signals, but they also explain what the psychology was that created those signals. So when you combine those two factors, you've got as good a grasp of what makes prices move as somebody that's been trading for 50 years. So we go through all the signals, all the patterns, how to analyze correctly what the overall trend of the market is so that you know whether you want to have your portfolio oriented to the long side, short side, or both. We look at where you improve your probabilities as far as the correct entry strategies, where to take profits on your correct exit strategies. Things that are just common sense that we all know. We've been told year in, year out when you're trading what to do. We just don't do them. But when you start looking and using the candlestick signals and patterns, it makes it much more easy to understand. We also do scanning for the best trades, where to put our stop losses, how to use the gaps in our favor, how to use convergence analysis, which is adding as many things that we can see instantly in our analysis to make for a very strong, high probability trade. The more factors we can put in, or the more convergence of the buy signal confirmation, the higher the probability we're going to be in the correct trade at the correct time. Where do you enter a trade on a slow curve? Usually if I see a slow curve just starting to set up, I'll start buying on the day right going into the close right before that breakout, because one of two things are going to happen. Either it's going to break out big or it's going to fizzle and I get back out of the trade. You look at days or months or years on your chart. Usually the only important part I'm looking at is right here. Then I want to see what the trade is. So it doesn't matter whether I'm looking at a chart pattern that is this big. If I want to see what's happening up here, maybe I want to see what the big pattern was, like a fry pan bottom. More than likely, though, I'm just more interested in this area. So I make my charts big enough where I can see them clearly. It doesn't matter how far back they go. Sometimes you take a stock and go candle by candle, right edge. Oh, can I? Yes. Yeah, we can do that on any one night. The other part of that we can do that type of thing, Ron, is on Monday nights and Thursday nights we have these type of sessions. Then on a Tuesday or Wednesday, we might just spend an hour on just entry strategies, how to show that your signal is confirming, and we go into detail. Or another night we might say, how do we utilize our scanning techniques? So we go into everything in detail. And we have all those videos on the site at a discount for members, but sometimes it's easier just to learn to be able to sit here like everybody's doing tonight and asking questions as we go along. You buy or sell based on extended hour action? No. If they're trading 2.5 million shares of this during the day, I'm not worried about what the few thousand shares are doing after hours. Let's see. Oh, was that your question up there? In the chat room, you said a stock was just profit-taking, yet there was a doji in the oversold over here. The next day opened lower. The next day doji at 8. The next day completed doji sandwich. Today lower again. Why did you not think the chart should be sold short or get out? Sometimes just because it's starting to sell doesn't necessarily mean it's time to go short. There might be not enough confirmation. That's why we know what the nature of each signal is. If it's pulling back with a bunch of dojis, that means it's not showing you real compelling selling. It's just indecisive selling. And there's a lot of times where you might have a trend line, a trend channel, a support level right below it, that it might not be the right. Just because the stock is pulling back doesn't mean it's going to be the best short. There's other, when we get to some of our shorts here tonight, you'll see what the difference is. Mark, yes. Candlestick signals the definition of a candlestick signal is that it's the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is daily, weekly, or monthly, or a 1 minute, 5 minute, 10-minute chart. They work just as effectively. This chart right here could be a 1 minute chart. It could be a monthly chart. They'll all look exactly the same. Okay. When you go short, do you buy inverse? You can do whatever you're comfortable with, Peter. If you don't like going short, you buy the inverse ETF. If you don't like going short, you can buy the puts. It all depends on each each person's individual risk factor. Do you use buy stops and sell stops? Yes. If let's say I was going to buy this chart and it closed here, I might say, all right, if this comes up through whatever this is, 820 tomorrow, I want to be buying. It tells me it broke out. I'm usually buying into strength. I'm not waiting for it to pull back so I can get in a good price, because as it pulls back, that means there's not a strong buying force. I'd rather buy something that's confirming a buy signal, moving in the direction that I expected to be moving. Okay. Don't pay attention to volume. We're not buying volume. We're buying price. A lot of people say, well, I want to see the volume go up as the price is going up. Price has absolutely nothing to do with volume. If stock's moving up and nobody's willing to sell it to you, it might go up very strong and very small volume. What's a good way to enter stocks that's coming off a bottom? JD, that's exactly the reason you should be here, is looking for the candlestick buy signals. The T-line is as effective on Forex, bonds, stocks, live cattle, tulip bulbs, anything that you have fear and greed in. The candlestick signals work. They're not for any specific trading entity. And we'll get to some of the gap ups here. All right, let me start running through some of these. So here, for example, is one of those gap situations. We recommended CRX a while back, but notice where it was time to take profits. Notice how far away we had moved from the T-line in the overbought area. When we started seeing selling, there was a left-right combo. If we're not selling here, we're selling on weakness, because where do you think the first target's going to be? Back here to the T-line. We can always start buying back on the next confirmed buy signal. Notice what happened over here. This is, again, convergence analysis. There's our left-right combo. A doji with a bullish engulfing signal, a bullish engulfing signal with a booster, what we call a booster, because it looks like a booster rocket. What did that essentially tell you? They were selling, and now all of a sudden there was a big major reversal. Where did it close? Above the T line. Where did it bounce off of? The 50-day moving average. What were your stochastics doing? Curling back up. What happened the next day after a buy signal? They gapped it up. What's a gap up tell you? It tells you that after a reversal signal, they are very anxious to get back into this position. That's exactly where you want to start buying. Bob, we'll get to situations where at some point, remember, we're not trying to buy something that's already running. We're trying to buy something that tells us right at the point where it is the buy time to get in, which has two major functions. One, it gets you into a position early so that if it doesn't work out, you're right back out with a very small loss. If it does work, you're in early on a strong price move. If you want to get in or out of a trade and the daily shows it's just above the T line, then you look at the 10-minute chart and it's below the T line. How do you interpret that which stock chart you use? If you saw something just above the T line, but your 10-minute chart is backing off, it's telling you they aren't buying, and so it's not going to go too much further above the T line right at that time. You just wait for the 10-minute chart to come back up above the T line, then you can be buying. Is there a best time of day to enter or exit a trade? I usually do probably 90% of my trades within the first 45 minutes of the trading day or within the last 15 minutes of the trading day. Everything else going on during the day is just noise. Remember, the most important factor of candlestick analysis is where does the price open and where does the price close. That's what makes the candlestick signal. This is all, again, there are very simple signals. Again, we're going to be doing the 2 full day training. Here's somebody was private messaging me. Here's the link if you want to see what goes on in these sessions. We've got lots of products for sale. We've got the chat rooms, but the best value for your money is just these 2-day training sessions, because you get every piece of information that makes candlesticks relevant. And the difference is, instead of seeing bits and pieces of it here on these type of sessions, you're getting it all in a chronological order that puts everything into a good sense learning process, so that when you come to one of these sessions like tonight afterwards, now it's not a learning session, it's a confirmation, kind of reinforcing what you've already learned. So with that, we've got trades that we buy. Yeah, and there was our J hook turn. Notice how this flat trading started with a big bullish engulfing signal. No, I don't do trades pre-market, because if you will see it pre-market trading, Apple comes out with their earnings and they look good, and in the next 10 minutes Apple is up $2.50, and then 30 minutes later it's down $2.50. So it's little volume. I want to see what everybody's doing, the big money or the majority of the money, doing the next day. But notice what we can analyze. When we got up here, we saw our bearish engulfing signals. It was time to take profits. Now, do we get rid of the chart? Definitely not. We watch to see what it does here on the T line. When it starts back up again, we can be buying, because now we know what type of pattern it's doing. They couldn't close below the T line. Stochastics started crowing back up. You know that wave 1 and wave 3 are usually going to be the same. We're buying in here, knowing that we've got big upside potential, which does two things for us. It tells us right now if we're buying the stock, great. If we're option traders, we've got some different alternatives. If we know this is a 7 move, we might pick out spreads in that uptrend that make much more sense than just buying calls outright. Will there be a recording for the 2-day session? Yes, it's recorded, so that if you can't make it the whole time, you've got the recording that you can always go back and look at whenever you want to. It's the ABCs of understanding how to use them. Worth the time. Is it worth the time? Yeah, I guess, Brian, that's something you want to ask everybody in here. To me, it's worth the time, but that's probably something you should ask everybody that's already done it. Which SMA do you prefer? I don't prefer any of them. All I'm looking at is to see what happened at one of those sessions or at one of those levels. Dominic, I think it's $895 for non-members, $495 for members. So I say that in the sense that a lot of people say, well, let me sign up as a member, take the course at a discount, and then make a decision afterwards. But what I do guarantee people, which I don't try to guarantee things, is that you're going to get a heck of a lot more information and insight into what makes prices move than you expect. We recommended FLDM today because what the pattern was. There's a fry pan bottom, broke through the 50. Notice what it did today. Came right back and used the T-line /50 as support, did a doji. And what's our simple rule? I think the member is $97 a month. Cheaper if you buy a quarterly or an annual type thing. And with that membership done, is you get these sessions. We got another session like this for members on Monday night. Our chat room is open all day long. We put out 2 or 3 stock picks every single day, not so that people just have stock picks, but they can see what the video was explaining to why that they were being recommended. And then on top of the Monday and Thursday night sessions, we usually have 1 or 2 sessions during the week where we go into a topic for an hour and go into fine tuning. So we know the there you go, Rick. The rule of the doji is they're going to move this in the direction of how they open. So if they open this positive tomorrow, the probabilities are extremely strong. They're going to take it up, and more than likely the same magnitude as that candle, the doji sandwich, which means we're breaking out through the 50. Where's our next target? More than likely up here at the 200. GLBS we recommended today based on the aggressive trader because the magnitude of movement made it worthwhile that you could trade this off your 10-minute chart, knowing that the percentage move during the day could be extremely big like we saw here, but they're eventually probably going to get back up into that trading range. So as we look at some of these, here's another situation where notice that this is what we call our inverted hammer signal. An inverted hammer is one of the 12 major signals, and it's got the reverse psychology that you would expect. The bears are happy, the bears are happy, the bears are happy, then all of a sudden, bam, they take it up and the bears are nervous, but by the end of the day, they take it back down, and the bears say, shoot, that was a close one, boy, it made me nervous. The next day they open up positive. The bears say, shoot, the bulls are still here. Get me out of my short position. And that starts your uptrend. Now, this signal right here is one of the 12 major signals. It probably occurs the least frequent of all the signals. However, this is an unofficial observation over the last 40 years that if you see a inverted hammer in the oversold area and it opens positive the next day, there's probably a 95% probability or greater that you're going to go positive. And again, anytime I see this situation, I want to be buying on positive trading because of that probability. Now, that also makes for a very easy stop loss. If you take my word for it and know that 95% or greater is going to go positive, where should it not ever go back to? Shouldn't open and through this level. If it does, you close it out because that's telling you that signal didn't confirm. So these are little tidbits that if you understand what's going on in investor sentiment, and investor sentiment does the same thing time after time, you put yourself in high profit situations. There's our best friend. This is our best friend. When you see a doji followed by a gap up and type of pattern it's setting up, a J hook. So this tells me I'm in my next wave. Where do I think at least my next target should be up here at the 200-day moving average. So the oils, as we saw, were strong because of the crude oil prices jumping because OPEC's planning on cutting back. So this is where the gap ups tell you an immense amount of information. Kicker type signal, scoop type pattern, confirmation telling us that the 50 is not acting as resistance. Where's at least our next target? Up here to the 200. Another one was HLX. Look at our best friend signal. Doji, right smack dab off the 50, gap up through the T-line, broke through this level. We're in the next wave to the upside. Whiting, we've been recommending as something that would be a long-term investment. Notice our fry pan bottom, the whipsaw, and then your Doji best friend. This tells us that more than likely there's still a lot of upside on this one. This one we have in our long-term picks because of the positioning that they have up in the Balkan field in North Dakota. There's a good probability that if you see oil stabilize back below or in between the $40 to $50 range, there's a good possibility that with their, whoops, that's way too much. This stock started downturning at 90. This could at least get back up here into the $40 range at that congestion area, based upon people not having to worry about what's happening with gold or oil prices. If they stabilize, probably the reserves of this company warrant a $45 stock. Now, we don't buy and sell stocks on a short-term basis based upon fundamentals. That's what is built into all the candlestick signals, is everybody making their decisions based upon their fundamental reasoning for buying or selling a stock. So we're buying based on what everybody else's research is telling us. ATW, gap up, gap up. When they start gapping up a stock, especially after a reversal signal, pretty much tells you exactly what's going on in investor sentiment. They want to get back into those positions with great enthusiasm. ERF, gapping up, probably much more upside. I've got to start running through some of these because there's lots of good-looking charts out there right now. There's our wave 1. There's our little wave 2 breakout, probably going into wave 3. That's on T's HE equipment. LUX. There's our morning star signal, scoop type pattern. Right off the 20, where do we think the next move could be? Well, if this is wave 1, wave 3 should take us into this range. So because we can identify the signals and patterns, there's our signal telling us there's a reversal. There's our pattern telling us we've got a mini scoop, and we know what the result of a scoop pattern is, a slingshot effect to the upside. Isn't what you just said about Balkan fuelers the reason OPEC's cutting won't have much effect for more than a few days? If they cut production, others will ramp up and fill the void. Not necessarily. What the psychology, remember, people aren't buying based upon fundamentals. People buy based upon the perception of fundamentals. And if the cut in the OPECs is an indication that prices may stabilize again back between 45 and 50, that means everybody is now going to be basing the values of these oil companies not because of a huge move of crude oil moving from 115 down to 35. Now they're making their evaluation that the price is prices have stabilized. So we can now make a value on what that company is. Stochastics going down. Well, you can see they're starting to curl back up. And what do we expect on kind of a J-hook pattern? That curling stochastics coming back up again. Let's see. ERI. So this is what we kind of expect. Do we always expect big, huge moves based upon our pattern breakouts? Definitely not. What we do expect, though, is to be in the right position at the right time where our probabilities of being in big price moves are dramatically in our favor. Same scenario. We can see the J-hook pattern, and what started the J-hook pattern uptrend again? A kicker signal. So if we recognize and understand what each signal illustrates, it also gives us that much more insight as to when a pattern is going to be setting up. What is a left-right combo? It's a doji followed by a bullish engulfing signal. So here's another one. Natural resources. You can see the J-hook pattern setting up. So say we were going to be ready to buy this, might put a buy stop just above today's high. If it comes up through there, pretty much confirming they're not going to come back down below the T line. The J-hook pattern is in progress. So when I started learning candlesticks, every time I looked at a chart, even if everybody and their brother on the talking heads are saying, "Oh, don't touch this one. It's this stock or this industry. It's got no place to go." And I start seeing buying. I sit there and say, "All right, are the charts wrong or are the analysts wrong?" And 99.9% of the time, the analysts are wrong. So what it taught me was you don't listen to what somebody is saying. You listen to what the markets are actually telling you. So here's another one that we can see is forming right on the 50, starting to see some buy signals above the T line. Is this worthwhile to trade? Well, if we can buy at 6 and at least come up and test 8, 2 points on a $6 stock or a 33% upside, that's exactly what we want to be looking for, the big price moves. The best friend signal is where you see a doji followed by a gap up. The doji represents indecision between the bulls and the bears, and we'll get a better one to illustrate. But you can see what's happening here. Your J-hook pattern, little scoop type pattern. Wave 1, we know what wave 3 should be, probably about almost a 3-point move. Now, is that worthwhile? Yeah, the probabilities are going up. So you might have different criteria for how you buy this. You might buy a call spread. So it gives you a lot more options of being in the right place at the right time and what type of charts. Yes, these are all charts that we're looking at on a daily. So somebody is saying, well, how far up does the stock go? I might not be buying here because it's already, don't know whether we're fizzling out. But I would be buying here because I can see pattern set up. Now, what time do I buy during the day? Well, that's where I just kind of flip down to my 10-minute chart. And if I was looking at it right here, say, yeah, I can still be buying. Right here, I might still be buying. Right here, I might not be buying because it's telling me there's selling going on the 10-minute chart. I'll wait for them to start buying again. So you can use your 5-minute. When I'm buying something off the 10-minute chart, as soon as I see the 10-minute chart looking like it's good, then I'll flip to my 5-minute chart to make sure the 10-minute chart is still going to work well. And if the 5-minute chart still looks good, then I'll flip right down to my 1-minute chart to see if everything's working. So there's that little scoop type pattern again on NTRS. Tells me I can be buying this. There's wave 1, there's wave 2. There's my little inverted hammer, bullish confirmation, scoop pattern. Stochastics curling back up. Where do I expect this to move to? Well, if this is wave 1, that's what I expect my next wave to be. Doji followed by a gap down. Yes, Rick, we'll get to that when we get over to the short. What is a kicker signal? I'll find you a kicker signal in here somewhere. There's our morning star signal, scoop type pattern. Basically tells you there's a reversal. There's our inverted hammer, bullish confirmation. At an uptrend until we see a sell signal. Oh, Bob, I'd have to look at that much closer to, yeah, I'm just pointing out that you can, if you know what the direction of the trade is, what the time is before expiration, whether you want to use a weekly or a monthly, and what your target is, now you can set up something that be a much more profitable, less risk, higher profit trade setup versus just buying calls outright. Again, there's your doji gapping up the next day. There's your scoop pattern. There's your slingshot effect. And how long did you stay in this? Until you saw a sell signal. And if you start seeing selling, where do you think the target's going to be? At least back to the T-line. Since the T-line works on all time frames, why not trade 10, 5, 1 minutes charts all the time on fast-moving stocks? Seems like you would accelerate your returns that way instead of trading daily charts or waiting longer. Mark, that's up to each individual. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Made good money, but at the end of the day, I felt like a wet dish rag. I was so worn out. And I discovered that when I was trading those in and out all day long, I wasn't paying attention to the rest of the portfolios. And so in my case, it's much more relaxing for me to just trade the bigger moves on daily charts. But when I get bored, I'll flip over to the soybean chart or the dollar and do some day trading in the middle part of the day when things quiet down. As with all candlestick signals, confirmation is required, like overbought and what else? Plenty of other things. Your stochastics, are you bouncing off a support and resistance level? Are you closing above the T-line? Not too much more than that. Basically, it boils down to if you see a candlestick buy signal in the oversold area confirming, probabilities are pretty much in your favor that things are reversing. If I skip your question, it's just because I'm trying to get new charts. We'll stay on as long as everybody's questions are answered. Volume being low volume issues or greater than 200,000. I've seen some suggestions with low numbers. I don't trade low volume stocks for two reasons. Because if I'm going to want to get in and out, I want to be able to get in and out instantly. And two, it takes the less volume, the more convoluted your candlestick signals might be. Big volume tells you exactly what's going on in a lot of people. Look at the big bullish engulfing left-right combo right at this level, kind of big bottoming action. Tells me pretty much that if this opens positive tomorrow, you can be buying, anticipating another move like this. Yeah. Mark's saying, why not use simple retracement numbers? You can use whatever you want to. We know that the charts work. We know what simple confirmations to use or confirming indicators. If I see a pullback, I might throw the Fibonacci numbers on there to see if it's turning around at levels that I'm not using those other indicators to make my decision. I'm using the signals to make my decision, and then using everything else to see why the reversal may have occurred at that level. So again, the more pieces of evidence that I can put that there's a reversal, the better it is. But my number one criteria is seeing where the buy signal is occurring. Are some of these big candles a result of high frequency trading? It doesn't matter, Glenn. It's all still the main element that there's buying and selling going on during a particular time frame. So it doesn't matter what the method of it was. It was all still based upon human input. Let's see. This is a belt hold. You can consider it a belt hold. And one simple rule of candlesticks is the bigger the signal, the more compelling the reversal. Um, Jim, I mean, are you talking about Freeport? Or Forex? Freeport, same scenario. Now, you did a left-right combo. There's a doji followed by a bearish engulfing signal, stochastics heading down. If you own this, if you didn't sell it out here, or you still own it and it closed right here, you've got one very simple rule. It has to open positive and trade positive to stay in it. If it opens lower, you close out the position. An IO stock, yes. If it opens positive, remember, an IO with that big bullish engulfing, they wiped out a lot of sellers. Remember, there was buyers, sellers, lots of sellers here, and the bulls took them right out. So that means there's less sellers in front of them at this point. On option trading, how far out do you like to go? I'm usually fairly short. Now, I usually just trade the monthlies just because I don't have time to follow weeklies because I have too much to do. And that, again, is a function of somebody's schedule, of how often can you watch your trades. So I buy the monthlies. But if I'm buying something, I'm usually buying it on the basis that I'm seeing something happen right now. So I want to be trading as close as possible to take advantage. So my usual rule of thumb is if it's somewhere around 2.5, 3 weeks or further to expiration, I'm just buying the calls or the puts outright. If you're somewhere in the 1 week to 3 week time frame, I might be doing debit spreads. And then if it's less than 1 week, you're in the week of expiration, I might be doing the debit or the credit spreads. They aren't very profitable, but the probabilities of seeing which way the chart is going and selling or putting some of that premium in your pocket are extremely high probability trades. Have you ever quantified how many gaps get filled within a particular time frame? Mike, nope, I don't care. I use them for targets, but a lot of people say, well, if something gaps up, won't that gap get filled? Let me find one that has a gap. Won't this gap get filled? It may, but it might be 2 weeks, 2 months, 2 years. I'm not worried about right now. I'm interested in buying this one. I'm interested in this trend right now. Again, hold your individual stocks until I tell Jim to do the double line, and then just type in your symbol. We'll go through them all. Now, on the other sides, we learn simple things of where do most people buy? They buy exuberantly at the top. So this question came up the other day. What should somebody have done with this? Well, if we know the simple rule that most people buy at the top, you're in an uptrend, you're in the overbought area, and they gap it up. That's one of the sessions we do over the weekend is how to use the gaps effectively, because if they gap it up in an overbought condition, what's that telling you? Either something fantastic is happening, or that's the exuberance at the top. So I got some very simple rules for taking profits. If this opened here and started trading positive, put your stop right below where it opened, because logic says if it goes up and comes back down through the open, it's going to probably form some sort of candlestick sell signal based upon it gapping up in the overbought condition. If it opens and immediately starts trading lower, I put my stop at the previous day's close. Logic says if it comes down through that level, it's going to create some sort of candlestick sell signal. So as you can see, this was a nice steady uptrend until they gapped it up, and that was where you start taking your profits. Notice what happened after that big bearish engulfing signal. Downtrend. So again, this is Candlestick signals are basically the common sense aspects of investing put into a graphic depiction. And they're usually telling us what's going on in human nature that happens time after time. Somebody asked, is the gap a doji followed by a gap down the same thing? Yes, that's your bearish best friend. Bearish best friend. Starting your downtrend. EXPR, a doji. Notice, and this is one of the things we teach people. Notice when we got up here in the overbought area, what did we start seeing? Even though it didn't close below the T-line, we were starting to see a lot of sell signals. So what's the best strategy here? Well, if you think it's going higher, why risk it? You close out the position and you can put a buy stop up here. If it turns this way, we know we got a J-hook pattern. Otherwise, at this point, which way do we know this trade is going? We know whether it's going up, going sideways, or going down. So why risk? Why be in a situation? We want to be in situations where we know the probabilities of that trade are extremely strong and it's going to move one way or the other. Is whiting a gap? Gapped up, but it's still a breakout of this fry pan bottom. I'd still give it time. And so right now, if you're buying, I'd be buying on positive trading tomorrow because this tells me the profit taking's over. Why? Because this is a fry pan bottom breakout. And how did it break out? With your doji gap up best friend. That's implying we should have some more upside. How many shares of stock should you buy all at once or 100 shares at a time? Lou, I usually buy probably 90% of my positions all at one time. If the signal is confirming, I buy the position. And I don't, very rarely do I leg in. Sometimes if it's moved up big, I'll buy a half a position. If it keeps moving, I'll buy the other half a position. The technical definition of a gap is it trades above any of the previous trading day, so there's a white space in here. See if I can find something that's more. I'll find it. So it basically tells you it's gapped up above any of the previous day's trading, not just the body, but the previous day's trading. IPHI is a perfect example of when you start seeing sell signals and a close below the T-line, the probabilities when it closes below the T-line is huge in the downward direction. So anytime I see a situation where if I didn't take profits here, I closed out here, what's my worst case scenario? It turns around, does a scoop type pattern, I can always buy back. No, sometimes whiting was already coming up. So your stochastics, when you're looking for a buy signal, is when it occurs in the oversold area. Your stochastics on a pattern breakout are usually going to occur when you're in the overbought condition. So that's where you want to learn the difference of where a pattern or what a pattern, where it will effectively work. Somebody was asking earlier about a kicker signal. NVIDIA had a kicker signal. Notice how it opened here and closed here. The next day they gapped it up at or above the previous day's open and went positive, which basically said they have kicked it in the opposite direction. Now notice what happened up here. Stochastics in the overbought area, doji, 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 doji. Remember what a doji tells us. There's indecision. And so this makes for a very simple stop loss. I would have closed out the position in here. But if I had held right here to the T-line, very simple. It had to open positive and trade positive today to stay in it. If I saw it open and start trading down below the T-line, after seeing this, close out the position. Basically, it's telling us that we're in a downtrend. Yes, whiting was a pattern breakout of a fry pan bottom. And we shorted, or we bought puts on Worthington, because notice where this gap down, and this is what you kind of call an island reversal. Notice how you could draw a circle right around this island. The fact that they saw our sell signal, bearish Harami, and they gap down through the T-line, tells us, and stochastic heading down, that we want to stay short on this one until you see a buy signal and a close back up above the T-line. So because we know what should happen in a pattern as well as signals, notice how this came up right here to the T-line and then closed below the T-line. So if you went long here, it needed to get back up above the T-line. The fact that it didn't do it very decisively and closed below the T-line, should have been closing back out. Now, with it selling off, what type of pattern do we have? Now we have a bearish J-hook pattern. So if this is wave one, if this opens lower tomorrow, you can start shorting with the anticipation that your next move may be down into this area. Why can we anticipate that? Because we know what usually happens in human nature to create the different patterns as a bullish J-hook or a bearish J-hook. Same scenario on BIDA. Notice how when they started taking up, they failed. Bearish engulfing back below the T9, telling us that this level didn't hold. Now we may have a wave one, wave two, going into wave three. The light blue line, this is the 20-day simple moving average. Again, the 20-day doesn't become as prominent. It usually occurred, or it becomes better. Oh man, this way across. It becomes more effective when you have a steady uptrend where they can't pull it back to the 50. They start bouncing off the 20. This is what we call a trend kicker signal. Notice how in the downtrend they did a bullish candle. The next day they gapped it down below the open of this candle. That tells you there's still a lot of force taking you to the downside. First likely target back here at the 50 where we're kind of congested before. Anytime I see something close below the T-line, I close it out. You can always buy it back, but the probabilities start going against you on the long side when you start seeing a close below the T-line. Remember, BIDA is a pattern, not a signal. Notice how you're in a bearish J-hook pattern. So more than likely, notice how you were in the oversold area this whole way down. So remember, we're not trading the stochastics. We're trading the signals and the patterns, and then the stochastics and the T-line and everything else become secondary indicators. NVIDIA, bounced off the 20, but look where your stochastics are. Again, below the T-line, or apt to be pulling back. Where could it pull back to? Well, you got a gap right here, right at the 50. That makes the 50 a likely target. All right, just a few more, and then let's see. So this is part of the stop loss process. Notice right here, if you were long, it was still in this 45 degree after the kicker signal. Again, kicker signal opens here, closes here. Next day they gap it up above the previous day's open and go the opposite direction, providing a strong trend until you see a sell signal and a close below the T-line. If you stayed long, what did you need to see on this day? You need to just, let me make this bigger where I can even see it. You need to see it open positive and trade positive. You know you've got a sell signal, stochastics heading down, so it needs to open positive and trade positive to tell you the T-line's acting as support. So very simply, you put your stop just down in this area, because if it opens positive and comes back down through, that tells you they're still confirming the last sell signal. And Micron, kind of the same scenario. When it opened positive, it needed to open positive after the doji. Where do you put your stop? Right down here. It shouldn't come back down through that direction, which it did. So there's just very simple identifiable places to say, all right, this is what human nature should be doing. Shouldn't be coming back through here. Let me put my stop right there. Notice how this failed at the T line. It did a little kicker type signal. Where do you think the next target was going to be? Down here at the 200. And NVCR, notice how you had a dark cloud. Where was it coming back to? The T line. Is it going to support at the T line? When it doesn't, you know you've got a downtrend. There's a wee little teeny gap right here that could possibly fill. The trailing stops are, let me find something, usually in an uptrend. If I get it up in the overbought area, I start using the previous day's open as my stop. It shouldn't come down through that level. Let's see if I can find something. We made good money on this one, especially over here, where still use the T line until you see a sell signal to close below the T line. Notice that kicker signal got us back into the trade. And then notice what's happened. There's our best friend signal. How long do we stay in this? As long as it doesn't close back below the T line. So, Jim, the answer is usually I pick A's. If I get up in the overbought area, I don't want to see it trade back below the previous day's open. So there's a lot of people that ask that same question because they're taught that you shouldn't lose X percent on a trade. Advisors say if you're down 3%, 5%, 7%, stop out your position. The answer to that is the market doesn't give a hoot where you bought. What you're looking at is when is there a change of investor sentiment that tells you it's time to get out. Hold on to the individual ones. Did I miss any? Hold on. I'll put that back in. He's asking for the link again for the weekend. All right. Any questions on general questions that I missed? As you see here, this question. Now, that best friend signal was confirming a pattern versus starting at the bottom. Okay, I know I went through a lot of these pretty quick. Does anybody have any general questions? If Nugget gaps up, yeah, if it gapped up through the T line, yes, I'd probably be a buyer because you're in the oversold area. You've got a bunch of dojis. If they gap it in that direction, it tells you exactly where to buy. A lot of times, I don't. I'm trying to find a best friend signal. I'll pick out some of these. You ever do a session on trading commodities? Yes. But it's so simple. I mean, there's nothing different. The only reason we do stocks versus commodities in any training is because more people trade stocks than commodities. It doesn't matter what you're trading. Oops. This chart looks exactly like a stock chart. This is crude oil for January. Same signals and patterns as anything else. So all you have to do is just learn what the charts are telling you. This could be a bond chart. This could be the dollar chart. This could be IBM. They all look exactly the same. That's right. Thanks, Rick. Yeah, the candlestick signals started with the most basic of all candlestick, or all trading entities, rice. And the Japanese rice traders didn't become wealthy trading rice, the most basic commodity in the world. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. Well, you have a morning star over here, which is, yeah, got a little bit of best friend. Is there a video of this session? Yes, Jim's recording this. Where do you find commodity symbols? Usually with whatever charting service you have, they will have a list somewhere where you can find the different, because I know on TQG, crude oil is CLAF7. Well, on TOS, it might be /CLF7. So they'll all be a little bit different. Where do you initiate the best friend? If I am watching something, see if I was something I was watching. If I saw something, let's say this chart ended right here. I knew I was in the oversold area, and I'm trading crude oil. Next, if I saw it open, I'd probably be buying immediately. Then I also know where my stop is, because I know which way it should move. If it opens positive after a doji in the oversold area, it should be trading positive. So where should it not trade? It shouldn't trade back below this level. So I've got very good situations that the signals put me in trades where I know the probabilities of being in the right direction are extremely strong, and I know if I get in early that my losses are very, very small. All right. Any other general questions? If I missed your question earlier, it wasn't because I was skipping over any. I was trying to read them all fast enough. Is this a buy or sell on ATRS? All right. I guess this is where you observe the obvious. Can you see any real good bullish or bearish signal pattern or move on this one? I can't. So if you can't identify which way it's going, you can see every time they take it up, they slam it back down. You can see your stochastics are heading down. You can see you're in a big fry pan bottom, but I wouldn't be in it right now. I might pay somewhere up here if they do a very strong buy signal. All right, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. CSX, not really. I mean, you're not exuberantly that far away from the T line. Now, you might see some profit taking up here, but usually what happens is they'll move sideways, waiting for the T line to catch up. I wouldn't necessarily be a buyer here. If I was a buyer, I'd be a little bit more diligent. I'd still use the T line as my ultimate sell stop. Okay, we're way back up here. Still getting private messages here. Yeah, in the 2-day training, you'll get all these signals. And what the benefit of seeing the signals are that you see where all the confirming indicators which work with them. So once you get done with the training session, you can look at a chart instantly and see what that chart is doing. You don't have to be an extensive, high-tech or sophisticated technical analyst. All you have to do is observe the obvious. Look at the obvious here. Downtrending channel. Can't get above the T line. Where's your next likely target? Right somewhere down into this channel. I'd be going short because you're not anywhere near the, stay short on this one. INSEE. You can see the bearish doji sandwich. You can see kind of the wedge formation breaking. I would suspect you're heading back to the 50. Price line. Same scenario. Roll over. Didn't hold at the 50. Next target right here. Next target right here. And GSL, you can be buying this one. Just make sure you got big volume. But since the breakout, look at your kind of your little fry pan bottom breakout. Now, you could be buying this one on positive trading tomorrow because it's going to move in the direction of how they open after a doji. Just make sure it doesn't come back down through the T-line. That's what happened here is there was the alert right here. Notice how flat it traded till the breakout. Then notice your doji sandwich. So if you bought it on this day, you definitely needed to see it open positive the next day. If you didn't buy it this day and saw it open positive, what type of reaction should we see? Well, we know it's probably going to move positive, and what's the potential or high probability range? Probably the same as that right here. The fact that you got a 300% move that day was great, and so notice what it did. It went from $4 to $104 in 4 or 5 days. So this is a situation where if you're way up here, you're watching your 10-minute chart. As soon as it got up in this area and the 10-minute chart started rolling over, what's your assumption? Look how far away you are from the T-line. Start taking your profits. So the magnitude of move away from the T-line is going to give you a good indication of when to be, if not a sell signal on your daily, when to watch the 10-minute chart to tell you that the profit taking is starting. So right now we've got a bearish engulfing signal on SSO. If it starts trading weaker, two things. Look for it to come back here and or watch for a J-hook pattern eventually setting up. EZA, you can get ready to start buying this one on positive trading tomorrow, and then just use the T-line as your stop. PCK, this one, again, notice how long this one could have been held. As long as it didn't close below the T-line, when you saw something like this, you had one criteria. It had to open positive and trade positive. Now you're up here where you have Doji, shooting star, Doji, close below the T-line. If you've held on to it, there's only one criteria you need. It has to open positive and trade positive to stay in it. If it opens lower, close it out. Freeport, same scenario. It has to open positive and trade positive. SDRL, notice it's been gapping up. Came out of this fry pan bottom, the whipsaw action over here, and the gap up. You can still be buying this one on positive trading tomorrow because it's telling you the fry pan bottom breakout has occurred and the 200 is not acting as resistance. Notice how today it actually used it as support. SKLN, you can almost see immediately there's absolutely nothing here. You're not moving in any direction. I'd be someplace else. Deer, J-hook pattern. Look for a 45 degree. As long as it stays above the T-line, you can stay in this one. And Sienna, you can see there was a resistance level. You can see the evening star signal. More than likely, they're coming back at least down here or here. So right now, I'd be short on this one and use the T-line as your stop. This is McDermott, Medtronics. When they gap down, you can stay short now until you see a buy signal. You're just getting into the oversold area. But right now, I just stay short until I see a buy signal. Blackbird, kicker signal. It's still in a downtrend. Still have more downside. I look for at least coming down to test this level. Blue failed when it got up here. So this is what we call a message. Message is they've gapped it up, but failed. It better show you what you're looking for now is the today's profit taking to end. Then you can start buying, because the message was somebody was trying to get into this one with great enthusiasm today. Home Depot don't trade very much, only because being an institutional trader, it doesn't have huge percentage moves. Right now, it's having a hard time getting up through the 200. Just looking at this chart, there's nothing there to get you real excited one way or the other, which means I'd be someplace else. Alaska Air, just stay long as it stays above the T line. Weibo got whacked today. Again, a perfect example of where do you set your stop. Anytime I'm up in an overbought condition and I start seeing indecision, easy. Put your stop right here. If it trades below there, which it gapped down, you close it out, because where do you think it's moving to? Back to the T line. Is it going to support there? I have no idea. Why take the risk? In this case, they had a big 10% move to the downside. The short, you can stay long. You're at a resistance level. You've had a left-right combo. The Stochastic's coming up, so see if there's more profit taking in the market, that will go higher. The Soro, that's a nothing chart. Number one, it doesn't have a big enough percent move one way or the other to make any money. And two, which way is it going? You can't tell which way it's going, so move your money to some place where you've got something that you can analyze as being a much better price move. Oh, boy. Hold on for 1 second. Okay, so that. CSTE. Another failure. You can see the rounding top. You can see where they failed up here at the T line. So this is why I always say, when you have a big slam like this, notice your inverted hammer, bullish confirmation. Where's it likely going to go to? At least test the T line. When you see it close back below the T line, that's the time to get out. Now you're right here at this level. If it opens lower, you can be going short, because that puts you in a bearish J-hook setup. Whoops. Let's see. R. Yeah. U.S. Concrete had the initial move because of all the construction. Right now you should be out of it. You've had an evening star. You shouldn't be long. So right now I wouldn't be long or short. There's nothing here to show us what it's trying to do. And ICE, this one you stay long. Bouncing off the 50, bullish harami. Bouncing off the 50, kind of a doji sandwich. Stay long until you see a sell signal. McDonald's. There's your kind of your flutter kicker to the downside. And then the gap down. I would suspect they're coming back to test the 50. PHM, bearish engulfing right here at the moving averages. Wave 1, wave 2, you're in wave 3 to the downside. So right now, we've been recommending you probably want to have both some longs and short positions in this in the portfolio, where the market was very boring all summer. We know at least now there's going to be movement either in the strong or long side or the short side. So we can take advantage of that. There's your shooting star. There's your best friend gap down. If this one opens lower, we know at least it's probably coming back down to test the 50, which may not be a big percentage move, but at least puts you in the right direction so you can see what to do once it gets to those moving averages with a little bit of profit in your pocket. We just did win. EXPE. EXPE also short on weakness tomorrow. First target right here, second target down here. CVRR, nothing. You can tell you're kind of in a wedge formation, which means you have no direction. Go on to something else. This is March coffee. It did hit the 200 in the oversold area. So if you're short, notice you're bearish engulfing. Bearish engulfing. Could never get back up above the T-line. Where was your logical target? The 200-day moving average. Now you just watch diligently here to see whether you start seeing a reversal signal. Oh, man, I keep forgetting what the JY, Japanese yen, stay short. You do have a little hammer type signal. So I'd probably put a buy stop right about here. But if it started bouncing at this level, it might be coming back up to test the T-line. Lab D, yeah, if you think the biotechs are going down further, you can be buying Lab D, the short fund. CALM, you can buy this one on positive trading because your J-hook pattern, as long as it doesn't close below the T-line, you're all right. But it definitely needs to break out pretty soon or you're going to be in a very, very slow uptrend. Let's see, the ultra short NASDAQ, biotechs, yes, you can stay long on this one as long as the biotechs are still a little bit soggy. And Padera looks like it's setting up. Notice your left-right combo, right smack dab off the T-line. If it opens positive, anticipate this move is wave 1, starting wave 3. So you could either be buying it here or get ready to buy it just above this level, telling you the wave 3 has broken out. And SYNA, there was a morning star. Now, there was your signal. Remember, we're looking for confirmation. So if this was my signal that told me I wanted to be a buyer, it definitely should not come down through this level intraday. So I have an intraday stop if I was in this right here. Or if it closed more than halfway down this candle at the end of the day, I'm back out of the trade. So right now, you don't want to be in this one. I don't know whether you want to be short because you're in kind of a congestion area. SRR or SRTY, short the Russell. Yeah, the Russell has had a good move up, so it's backing off a little bit, so you can be buying this as long as it's still backing off. But if it came right back down through the T-line, that means picking up strength in the Russell again. Labu, stay short. Did we do ICE? Yep, stay long. Corning. Another one that showed a failure yesterday. Notice how they took it up and brought it back down. All your shooting stars here. You should be out of this trade once it came back down through this level. Might be going short if it opens lower. Kind of expect at least this target as your first target. Western Digital, same scenario. Here's a perfect case where when it opened up, came up, if you just put your stop where it opened today, it would have been all right. Definitely did not want to see it trade back below this level because if it came back down through there, where do you think it was going to? To the T-line. So now you've got a left-right combo with a booster to the downside. If it opens tomorrow, you could be shorting it. And ZIV, left-right combo. Nothing real exciting about this chart, but it's pretty much telling you now the likely target is down to the 50. Let's see. We did CSX, right? Stay long. UVXY. You can get ready to buy this one. Just be aware that your resistance level is probably going to be up here at the the moving averages. ConocoPhillips. I think ConocoPhillips. I think they're the ones that are the leader of this in the new big field they found in Texas. Right now, I just stay long, as long as it stays above the T line. SRPT, stay short. Look for the 200 to be the target. CVX, Chevron. Maybe it was Chevron. I can't remember whether it was Chevron or Conoco that's involved. But right now, I'd stay long on Chevron. LR, I don't know what that symbol is. Walmart. Walmart should be doing well because Sandy's over there every single night practically. But this is not a good trader. You can see there's no direction, and there's nothing here on this chart that would get you excited one way or the other. It'd be someplace else. Tazar, another one's having a hard time getting through this resistance level. Not a good-looking trading stock. If you're going to be a buyer, I'd be a buyer with it coming back up through the 28.50 level, knowing that it broke this downtrending channel. ACAD, stay short. Notice the failure, left-right combo. Notice how you got a lot of indecision in here. Now they've told you which way they're going to take it. More than likely, they could be coming down to fill this gap. SPX doesn't come up here for some reason. The gold or oil gapping up. Still looking for it to come back up to the top of the trend channel. Facebook, just not a good trader, but at this point, I'd be going short on weakness tomorrow on a bearish J-hook pattern potential. BNSO, you can be buying this one. Nice little slow curve. Just I would be trading this one because of the magnitude of percent move. I would be using my 10-minute chart. This one you can be buying also, especially if it comes up through the 50, telling you it broke out. Natural gas, stay long. Still moving up nicely. I don't think I get Fannie Mae over here. No, I don't. And then we did DRYS. FTI has been acting well because of the gap ups. I would stay long as it stays above the T line. IPXL. Yep, you can stay short on this one. You can short this one on weakness. MTW, this one, you know what to do on this one. It'll move positive if it trades positive. If it opens lower, probably want to come out of it because it's having a hard time getting through this little congestion area. If it opens lower, it's probably coming back to test the T-line. And Fred, just stay long, but you're in the overbought area, so you definitely fit your stop somewhere where it shouldn't be moving, like back below the T-line. Skechers, big gap up off the 50. I would anticipate watching to see what it does once it gets here to the 200-day moving average. And Crocs, nothing there yet. You have a bullish Harami, but you're not in the oversold area. Let's make this bigger. So if I was short right now, I'd probably use today's high. If it came up through there, I'd cover my short position, anticipating they're going to bounce it back up to the T-line. AIOM, JD, that's not coming up. The middle candle of an evening star can be just an indecisive candle. Doesn't matter whether it's a red or green candle. If it's a doji, spinning top, shooting star, inverted hammer. It's just a day of indecision, one of the indecisive signals. Costco, having a hard time getting out of this range. More than likely, I would not be in it until it breaks up through the 200. And Post Property, or is this not Post Properties, but the Serial? This is the one that one website. Not anything real great here. If I was going to do anything, I'd probably be shorting it on weakness. You can see the downtrending channel, so somewhere down in here could be your next target. MRU, that one's not coming up. Are you looking for MURs and Murphy? I would stay long, anticipating a 45 degree. The SPY selling off a little bit. If it opens weaker, more downside. I don't know if it's out of text and into financial specifically, Candleman, but we can see that there are different sectors rotating, and that's the nice thing about the candlestick charts. We can easily see which ones are picking up the strength and which ones are selling off. And it doesn't take a rocket scientist to analyze the charts. AGNC just stays short. Notice what it couldn't do ever since they gapped it down. Notice your shooting star gap down. Notice your trade below the T-line. They could never get it back up above the T-line. Couldn't hold this support. Stay short until you see a buy signal. Caterpillar. Not a very exciting stock. You can see that it's in a 45 degree as long as it stays above the T-line. And FAS, just stay long as it stays above the T-line. My stochastics are 12.33, slow stochastics. Okay, last one, Chipotle. You're in a slow downtrend. It's a toughie right now. I probably wouldn't be long or short because you can't really tell which way they want to take Chipotle. All right, last three, then we got to take a break. GM was acting well today. Nice breakout. Stay long. Use the halfway point of that candle as your stop. United Health, another one where you just stay long. Now, you're in the overbought condition, so a very safe place to put a stop is at today's open. It shouldn't come down through there. We did CVRR into it. Whoops. If this opens lower, you got a bearish doji sandwich after the bearish engulfing signal. I would suspect the 50 is your target. All right, everybody. As you can see, there's a new dynamic in this market. Now we're back to having a much more volatile, which makes it much easier when you're trading candlesticks to find which sectors are acting well and which ones are heading in the wrong direction. But with the market up this strong and the NASDAQ showing us that there's profit-taking galore going on, wouldn't hurt to have longs and shorts. So there's going to be some good profits in both directions. Oh, Bill Johnson, Rick, tell Bill I said hello. I haven't talked with him in a long time. Okay, everybody, have a good evening. We'll see you bright and early in the chat rooms.